A few days ago, I sold everything. I sold stocks, I sold property, I sold assets, I even sold a kidney so I could land up buying more crypto. And the reason why I'm doing this is pretty simple. The first thing is, I still believe that we're in a bull market. For me, it's pure and simple. I still believe we're in a bull market. The next thing is that I think this whole halving cycle, number of days thing, and a bull market that ends because of a certain number of days after the halving in a $2 trillion asset is not significant at this point in the cycle. I also believe that the real bull market hasn't even started yet, right? I believe that the real bull market is going to start when liquidity actually expands. And I'm going to show you some data points today about when that liquidity is actually going to expand. And I also believe that after a 36% correction in the cycle, I think we had a pretty brutal correction, and it's a good time to be bouncing right now. So today, I'm going to show you the data points. I'm going to show you why I'm so confident and why I sold everything and I put more money into crypto. After I said that I wouldn't put any more money into crypto, that's what I did. So it's going to be a very big show today. And I'm going to show you all the data behind all these things that I've said. Let's go, guys. I did say the other day that I thought this correction is over. You remember that I made a video the other day. I think the video was actually called, here it is. It's the video that's called It's Over. And on that day, I basically said, look, it's this correction that's basically over. And it's time for the markets to actually start recovering. And now we've got that recovery starting to happen. And we're back in this channel, or back in this wedge that we dipped below, and this wedge has been going up since 2023. So I maintain the conviction that we're actually going up, and today I'm going to show you the data points as to why I'm so confident and why I actually put more money into crypto even after I said I wouldn't be putting more money into crypto. And that's even after all the naysayers have said, look, it's the end of the 4-year cycle and this whole cycle's over. So listen, guys, it's a big show today. If you're new to the channel, obviously subscribe to the channel. If you are here, remember, I wasn't here yesterday. I'm not going to mention the reasons why, but you know what the reasons why were, right? And I need you guys to like this video because that really helps us get a whole lot of distribution. So let me talk about, I'm waiting for you to like the video. Come on, guys, I'm waiting. So let's talk about why I was so confident that the correction was over to make a video where I said it's over, right? And that's the video where I said that the correction was over. The truth is that I saw a few things happening. I saw a bit of a changing in the pattern. You remember that in that video, one of the things I said that every day in the US market open, the market started dipping. And that trend carried on for the whole time during the dump. But then a few days ago, what we started to see was that the US market opened and the market wasn't dumping anymore. And when I took that data point and I looked at the Coinbase Bitcoin Premium Index. Now remember, this shows the amount of sellers effectively in the United States, and usually big sellers, institutional sellers, right? And what I was looking for here, what I was seeing here, was I was seeing that the Coinbase a negative premium, which means that a lot of people are dumping on Coinbase, was actually starting to close. And so that showed me that the panic selling or the big net selling had actually stopped. I then looked at the ETF flows, and the ETF flows basically said, look, we had days where there were big ETF outflows, but those days have subsided. And you can see we're not having those big days anymore. In fact, the last 2 days, we've actually had money flowing back into crypto, right? And if you look at where we bounced or where we stopped, all the short-term holders capitulated. We went below the short-term holder realized price. We also had the mass capitulation events, which I showed you guys the other day. We had a very big correction. We had a 36% correction in a cycle where, to be honest, 36% corrections are not really part of the game, right? And so if you think about what that 36% correction represents, I think it's important to put it into perspective, right? If you think about what it represents, that 36% correction represents about $1 trillion worth of losses if you take the top wick to the bottom wick. That's a pretty sizable correction. All the weak hands that should have been shaken out basically got shaken out. All the leverage was reset in the system, as you can see. So the leverage completely reset in the system. Fear and greed had completely reset itself. we had multiple days of extreme fear, which is exactly what I was looking for. And the worst part is, or the best part is that all the FUD, and particularly the MicroStrategy FUD and all the other FUD, that's now out in the market. And so I got to a point where I realized that we've basically hit all the correction points and it's time for this market to actually turn around. As it relates to the FUD, I made a video today, which I think is probably one of the most intriguing videos you're going to watch. And it details, or it breaks down, how the system is using MicroStrategy to attack Donald Trump and his crypto holdings. So I dropped it on Crypto Insider a few minutes ago. What you need to do is you need to go to there's a link below. Go down to the description. There's a link below, and you can actually watch that video straight after the show. This video, it's 20 minutes, and it will absolutely blow your mind. Anyway, so I realized that this correction is pretty much over. I showed you the data points as to why I think the correction is pretty much over. And now where we are is we've had this bounce, right? And we're back in this wedge. So if you look at this wedge pattern on Bitcoin, this is a Bitcoin wedge pattern. I'm actually going to go out into the weekly so that you guys can see it over here. So there we go. So you can see that if you look at this pattern over here, this is the wedge pattern that we've been in on Bitcoin. And we fell out of this wedge, which was a little bit concerning because that really could have pushed us into a bear market. But now we're back in this wedge pattern. Now, look, I'm not celebrating too early because we've just started bouncing. And there are a lot of levels that we still have to cross. I mean, if you want to talk about the levels, some of them are on-chain levels, some of them are psychological levels, but there's a lot of levels that we have to cross. First level that I think we have to cross is we have to cross the $100,000 psychological level. Like that for me is a big level. And whilst we're on the way to close the $100,000 psychological level, we need to cross over this $95,000 level, because if you look at this level over here, this is the 95, geez, this Black Friday special keeps killing me. This is the $95,000 level. And remember when we lost this level, I said it was a very key level. So I'm kind of looking at Bitcoin's path to recovery and I'm going, okay, cool. We're back in the wedge. Good sigh of relief. Very happy about that. Still quite a way to go. Multiple checkpoints on the way. I mean, one of the checkpoints, the yearly open. So if we go to where we actually opened the year, 93,442, that would probably be my next stop. Technically, that's not a real level, right? Technically, 93,442 is just a psychological level. It's not actually a technical level on the charts. On the charts, 95,000, big level that we have to claim. Why? Because this is the support, the big support resistance level from the election win all the way into the cycle. Very key level. Then the 100,000 psychological level, super important level. Then we probably have to cross the most important level of them all, and that is the 50-week SMA on Bitcoin. That's the Ben Cowan bull market support. And he kind of said, look, if we close 2 weeks under that, he's going to concede that we're in a bear market. Yeah, that level currently is at about 102,416. That's more or less where that level is. Ideally, we should cross the weekly above that. And then if that starts to happen, then we can start talking about other levels, maybe towards the all-time high, etc. But for now, let's go baby steps. Let's get over the 93-year beginning open. Let's go. Let's try and get ourselves through the 95 support resistance level. Then let's go up into the 50-week SMA and then let the bull market basically continue. Now, I want to talk about this bull market thing, right? Because I believe, and I've said from the beginning, that I believe that we're still in a bull market. I know certain naysayers have said, look, the 4-year cycle's over, the 4-year cycle's dead, the bull market's over. I've said from the beginning that I don't believe that. I've been quite vigilant about saying that bull markets don't end like this. Bull markets end when something breaks or when people lose conviction in a certain asset or a certain asset class. And in this cycle, nothing's broken. People haven't lost conviction in the asset or the asset class. On the macro level, absolutely nothing's broken. So for me, the bull market ain't over, right? For me, what I'm expecting, and I've said it a million times, I'm expecting a 2021 type scenario where we had our little black swan over here. We dipped down over here, and now we're going to start going back up. And I tweeted that on November 23rd, where I said I'm expecting a 2021 style comeback eventually with a higher high. So why? Why am I expecting this? Well, there are a couple of data points that I'm looking at again. First thing is, let's look at the basics, right? The basics, none of the bull market indicators actually went in it. So if you look at the bull market indicators, none of the bull market indicators went in it. And you could say, okay, well, you know what? Those bull market indicators are very much retail-driven bull market indicators, and I agree with you. And that's why I'm not basing my thesis on that specifically. But no matter which way you look at it, none of the bull market indicators have basically been hit. If you look at where we bounced exactly off the production cost line for Bitcoin. Now, if you look at this chart around the production cost line for Bitcoin, what you'll realize is that in bull markets, we generally stay above the production cost line. And only in bear markets do we start going below the production cost of Bitcoin line. Now, where did we bounce? We bounced on the production cost of Bitcoin line. And so for me, that's a super encouraging factor. If you look at where we bounced relative to the short-term holder basis, we liquidated all the short-term holders that wanted to sell, and we bounced we just bounced above the ETF holder basis, right? That's a big place to be bouncing. And I think that that's one of the critical support levels. But most importantly, I want to show you a chart that I don't think anybody's looking at. And what this chart is tracking is it's tracking the 20-week moving average and the 50-week moving average. And what you can see is that in bear markets, every time we've had a bear market, the 20-week and the 50-week have basically crossed each other. It happened over here, and then it happened again over here, right? And in this interim dip over here, the one we had in 2021, the 50-week and the 20-week didn't cross each other on the way down. And if you look at this chart again, this chart hasn't crossed on the way down. And until this chart crosses on the way down, I don't believe that we're going into a bear market. And so there's multiple data points that I'm looking at around whether or not we're going into a bear market. And one of the data points that I'm not looking at is the 4-year cycle. I'm not looking at this 4-year cycle. I don't believe in the 4-year cycle. I believe that the 4-year cycle was a complete coincidence. I believe that 𝗙𝗘𝗔𝗧𝗏 is brainwashed into the fact that the cycle must end a certain number of days after the halving. And maybe in the first Bitcoin halving cycle, when we were mining 50 Bitcoin in the halving cycle, then maybe I believe that, there's an argument. But for an asset with a $2 trillion market cap, I don't believe that the halving supply makes a difference. And specifically, not in an environment where the institutions are the ones buying things here, right? I don't believe that Larry Fink is sitting in his office going, oh my God, it's 530 days after the halving. I think that the cycle is driven by something much bigger than the halving. And I think it was completely coincidental that this thing lined up with the halving, right? And this thing that lined up with the halving was actually global liquidity. If you look at this chart over here, what you'll see is that this is the global liquidity chart, and then the red line is the PMI. And what you can see is that the global liquidity, and therefore the PMI, went up. When they went up, the Bitcoin price went up. And when they went down, the Bitcoin price went down. And I think that's what drives the cycle. But I think what also happened is that in the halving cycle, coincidentally, as you can see, the global liquidity started going up. There's the halving cycle from 2016, 2017. And you can see that that's the exact time when global liquidity started to go up. And then you can see again here that the global liquidity started to go up. And what happened was when global liquidity went up, the economy started to expand. And when the economy started to expand, the PMI, which measures the economic expansion, started to go up. And it just so happened that it lined up with a halving. But that's not what's happening here in this market. In this market, everyone's looking at the wrong chart because everyone is looking at the M2 money supply. And they're comparing the M2 money supply and they're saying, look, Bitcoin and the M2 money supply have completely diverged, right? And to a certain extent, I guess they're right. Bitcoin and the money supply have diverged. But the problem is that they're not looking at the money supply correctly, because the right chart to be looking at when you're looking at the money supply is the global net liquidity. Now, why do I say net liquidity is more important than the M2 money supply? The reason why net liquidity is more important than the M2 money supply is because you've got to think of money supply like this. There's money supply that is given from the Treasury or from the Fed into the system, And the distributors of that system are the banks, right? Whether they're the central banks, etc., etc. And so if there's money in the system, but the money is held by the Fed or being put into the TGA or being held by the banks or being held by the central banks, then yes, the money is in the system, but it's being held in this custody vault or in these custody vaults with these custodians. And so what's basically happening here is that, yes, the money supply is actually increasing. The M2 money supply is increasing, but the M2 money supply doesn't take into account that certain of the liquidity in the system is tied up in other things. What is it tied up in? Well, number one, it's tied up in the TGA. Remember that the money went into the money went in, but then they sucked out all the money and they put the money into the TGA account, right? And so yes, the liquidity was in the system, but the Fed took that and put it into their TGA account and drained the economy of $150 billion. There's a whole lot of money that's sitting in the banks in the reverse repo facility, which is basically being hoarded and not entering the market. And so I think that what the market's doing is we are being fooled into thinking that the 4-year halving cycle is the key here, where the 4-year halving cycle just lined up with liquidity. Problem is, we're looking at the wrong kind of liquidity. Why? Because we're looking at the M2 money supply, and we're not taking out all the money that is hoarded in the money that's in the system, but not actually being put into circulation. So net, if you look at what this chart is telling you, it's that global net liquidity and US net liquidity have both been coming down. And because US net liquidity and global net liquidity have both been coming down, actually the economy and the PMI have been contracting. And so now you look at the PMI chart and you say, all right, well, here's the PMI chart over here. And surprise, surprise, the PMI chart has been contracting. And so what's been happening is we've been sitting here going, oh, it's the 4-year cycle. 2025 should be a bull market year. It hasn't been a bull market year. No one can argue that 2025 was an actual bull market year, right? We started 2025 January at $93,000 on Bitcoin, and now we're at 90,711. And when it went from 93 all the way up to 128 or 127, we said, oh yes, we're in a bull market. But that's not what a Bitcoin bull market feels like. And the reason why we try to convince ourselves that we were in a bull market was because we were counting days from the halving. But this time, unlike the previous times, the PMI didn't expand. The global liquidity didn't expand. And because the global net liquidity didn't expand, and it looks like that, we've been sitting here for this whole period waiting for this bull market to happen, which hasn't happened because if you look at the indicator or the PMI chart, what you'll realize, let me try and get us a PMI chart. Here we go. If you look at the PMI chart, the PMI chart is basically being sideways or going across. And that measures whether or not the economy has been expanding or contracting. Generally, when the PMI chart breaks above 50, that's when Bitcoin starts to run. When the PMI chart gets above 55 or 60, that's when the altcoins start to run. Just look at 2021. Let's go to 2021 and let's go to the PMI chart and let's go to 55, 60. That's around September, October, November 2020. Let's go to total 3. Let's go to total 3. Here is total 3. And let's go to, we said September 2020, and this is total 3, September 20, let's go here, September 2020. That's when the PMI chart got to 50. Let's go back to our back to our PMI chart over here. Okay, and let's go back to 2021. Let's see when it hit 60. So the PMI hit 60 in December 2020. That's more or less when the PMI hit 60. Let's look at what happened in December 2020. December 2020 is here. That's when the PMI cycle hit 20. So here we are. We've been sitting here trying to convince ourselves that because of the number of days after the halving, we're getting a bull market. 2025 wasn't a bull market. In fact, I would argue that the bull market is only going to start now. And so if you're going to be fudded out and you're going to start selling your coins now because you think that Larry Fink is sitting watching a rainbow chart on his desk and counting the number of days from the halving, let me tell you that you've got this whole thing all wrong. Bitcoin moves with global net liquidity. Here's the global net liquidity index, and the global net liquidity is going down. That's why 2025 hasn't been a bull market. Okay, I think 2026 is going to be a bull market. I think that in 2026, what's going to happen is, I think the PMI is finally going to expand and break above 50. I think that global net liquidity is going to go up, and I don't think this blindly. The reason why I think it's going to happen is very simple. Rate cuts, 85% chance of rate cuts happening right now. QT ends in 4 days. 4 days, Powell ends QT. Fed rate meeting on the 10th, we'll hear more about the Fed policies. At the same time, they've stopped draining the Treasury General account. They stopped draining it. They're not draining it anymore. Remember, they were refilling it. Sorry, they were refilling it. They refilled it from July until November. They took $500 or $600 million out of the economy. That is draining net liquidity out of the economy. That's finished. They're not going to drain money out of the economy to fill the Treasury General account. QT ends. At the same time, there's a new frontrunner to be the new Fed chair. He comes in May. Markets are forward-looking vehicles. If he comes in, we've got ourselves a dovish Fed chair who is a big crypto advocate. And I think he actually served on the board of Coinbase, or was one of the board of advisors on Coinbase. So what do I think happens? I think that the bull market starts now. I think that QT ends in 4 days. Liquidity cycle starts to expand. As the liquidity cycle starts to expand, the economy starts to expand. If the economy starts to expand, the PMI starts to go up. When the PMI breaks 55, Bitcoin starts running. When the PMI breaks 60, altcoins start running. That's why I'm not capitulating right now. I'm following the liquidity. I'm following the PMI. And that's why I'm so confident to be buying so much. If I look at all the other indicators, they're all pointing in the same direction. Look at silver. Silver's finally broken through this cup and handle. Now, what we know is that Bitcoin is to gold what silver is to gold. It's like the other alternative, right? And you can see that Bitcoin and silver are getting to a 90% correlation at the moment, right? What does that mean? It means that the smaller, more risky alternatives that usually run when people believe that risk assets are going to run have started to run. There's another one of those that we always follow, and that's the Russell 2000. It's the smaller shares. It's the 2,000 smaller shares. Look at the weekly candle on the Russell 2000. Look at this. Look at the shape of the Russell 2000. We're starting to see a shift in liquidity. When we see the shift in liquidity, Bitcoin is going to catch up. Right now, Bitcoin is decoupled from the Mag 7. You can see it over here, right? Bitcoin was trading in lockstep with the Mag 7 until last month. And now Bitcoin is down 15% versus a 25% gain on the Mag 7. Now the question is, what's going to happen? Are the Mag 7 going to crash to fetch Bitcoin? Or is Bitcoin going to recover to catch up and keep its position over here? Well, again, let's go back to liquidity. The problem with this cycle is that everyone is so convinced that we've ended because the number of days since the halving that they've forgotten to actually look at what's important and look at the actual liquidity. And that's the data point that I'm using. Now you can say, yes, Ran, but you spoke about all the FUD. And I did speak about all the FUD. I made a video. Guys, I'm saying to you again, if it's the last thing that you do today, go and watch this video on Crypto Insider. There's a link below. It is the most intriguing video, probably the best video I've made, and the most intriguing video that you'll ever watch. Hardest if you watch the video. And what do you think? Amazing. So, yes, there is MicroStrategy FUD. Yes, they could be excluded from the MSCI indices. But whilst that's happening, and what the video will show you is that there is a massive. Let me move my bottle out of the shot. Whilst that's happening, there is a tug of war because a lot of other very deep institutional things are happening to actually help Bitcoin on the way up. One of these big things that actually happened today, right? And it seems like a small thing, but it's a very big thing. Bitcoin entered the club of the biggest blue chip equities out there. And not specifically Bitcoin, but the BlackRock IBIT ETF. They are now increasing it into the same liquidity bracket, and they're raising the options cap on the NASDAQ from 25,000 to 1 million contracts. Why? Because this has been stopping traders from placing really big positions over here, right? So he says, I actually want to read you something over here. It says, IBIT news is the biggest news of the week in my humble opinion. When an ETF gets promoted into the mega cap derivatives class, it unlocks a second order effect that retail never sees. Market makers can finally hedge size without constraints, which means that tighter spreads, deeper books, and more aggressive liquidity provision. Banks can run structured products on Bitcoin without blowing through their risk caps, which means Bitcoin becomes more collateral for an entire new frontier of financial engineering. Volatility sellers into the market, which suppresses short-term noise and amplifies long-term directional flows. Institutional mandates automatically trigger because many funds legally cannot trade assets unless they're in this regulatory class. So whilst Bitcoin or whilst MicroStrategy may be at risk of losing an index, this product just entered a new blue chip club through this small, or what felt like a small tweak in this announcement. He said, when Tom Lee told us that institutional investors were using MSTR options as a hedge, the natural question is just, why can't they use IBIT options? The answer is the NASDAQ only had 25K contracts available. Well, not anymore. The NASDAQ just increased IBIT options to 1 million contracts. So yes, we do have MicroStrategy FUD, and I've spoken to industry insiders, and they're telling me that the legal cases, not legal cases, but the support that the MSCI are getting around including the companies into the treasury, into the indices, is very, very compelling and very, very big. At the same time, Bitcoin was just allowed into a new club doing this. And one of the things that I mentioned is that when this happens, the banks and the banks can create more structured products. And one of the banks that has created a structured product is JP Morgan. JP Morgan has created a new directional structured note. It's a structured note that has an auto call feature. Basically, what it means is that if Bitcoin is above a certain price, JP Morgan automatically closes the product. So in other words, it's like one of those downside and upside protected notes. And JP Morgan just created one of these notes. And people are saying that's probably why JP Morgan manipulated the price down to limit the exposure around this note. And so look, I know some people are still counting halving days. And if you are, that's great. Put a calendar up on your wall and count the halving days. I'm looking at the more serious stuff. I'm looking at global liquidity. I'm looking at the things that actually matter. I'm looking at the expanding cycle. I'm looking at quantitative tightening. And ultimately, I'm using that as my driver to tell me that this last correction was exactly that. It was a correction. It was a deep correction. And now we're on track to continue with the bull market. And that's why I think it's time to be buying. And maybe tomorrow or over the weekend, I'll make another video of exactly what I'm buying, because you don't want to be taking too much risk. So I'll make another video around exactly what I'm buying. In the meantime, I urge you again to go and watch this video over here. Go and watch this video over here. I'm telling you, it'll be one of the best things that you ever do. And before I go, guys, it's Black Friday tomorrow. I've asked you Monday, Tuesday, Wednesday, Thursday, and Friday about joining Frontrunners. The seats are going super fast. I'm going to refresh this just to see how many have gone. Okay, there's 63 left. 63 people can join Frontrunners at a 50% Black Friday special. It's never happening again. Normally, people pay $2,400 to be part of Frontrunners. Our special is at $1,199. If you want to see what you get in Frontrunners, number one, I have my own channel. I live here. I send voice notes. I answer questions. I give my buy lists, etc., all in my own channel. Research, morning calls, 12 analysts working full-time for you in your pocket, giving you calls all the time. Here's the WLFI call, the Fartcoin call, the ZK Sync call. Just look at the P&Ls that our members are actually, these are real P&Ls, guys. Like there are tons and tons and tons of these real P&Ls, even in this bad market. I promise you that this will be the most best ROI decision that you make on Black Friday. Invest $1,000. There's only 63 places left because we're only doing 500 spaces. Invest $1,000 for a year. I guarantee you, you'll end up making that money back. And then one last thing before I go. If you want to learn how to news trade, remember that tomorrow I'm doing a workshop. There is a link to that workshop over here. And tomorrow I'm doing a workshop to show you guys how to news trade. It's a free workshop. You don't need to pay. There's no pay gates. There's nothing out there. All right, chaps. There's a big show. This was a big show. Let me know what you think in the comments about the show. And if you enjoyed the show, do me a favor. Hit the like button. And if you're not already subscribed, subscribe to the channel. See you guys again tomorrow. Until then, trade well, my friends.